Thank you to Junpei, Lorna, and Hui for the very insightful and practical sharing. I think I learned quite a fair bit myself doing this. So I think some of the questions that were kind of raised during the registration, pre-registration phase were kind of covered by your respective presentation, but I thought it would be useful also to re-emphasize some of this. So one of the question really is it a good idea to refinance my mortgage during this period? I think many questions on many people's mind about this question. Is it a good time? Is it a good idea to refinance my mortgage? Maybe Lorna, you want to just have a go at this?
Okay, thank you, David. Yeah, I would say it is a good time to refinance your mortgage because we're in a low interest rate environment. So review your mortgage package right now, your existing mortgage package, and look at the interest rates and the savings that you might enjoy if you do a refinance. But of course, there are 4 points to look at. Firstly, the timing. If you're considering applying for a refinancing, then you have to do it 3 or 4 months before. You need to give notice to the bank between 3 to 6 months, okay, notice period to inform the bank that you want to do a full redemption and then refinance the loan, possibly within the same bank or with another bank. Then consider whether there are any possible penalties that you need to pay, especially if you're still within your locking period. Okay, so the penalty might include a 1.5% penalty of your outstanding loan, and they may also claw back legal subsidy that was granted to you during your loan application. Then thirdly, please understand that there will be costs involved in refinancing, and we're talking about conveyancing fee and valuation report fee. And then lastly, if you're a HDB loan holder right now and you want to switch from a HDB loan to a bank loan, do note that once you do the switch to a bank loan, you cannot switch back to a HDB loan for the same property.
Thanks, Lorna. I think quite a number of points that you need to take note really before you refinance the mortgage. The second very common question is about whether the current MediShield policy will be impacted by COVID-19, and do we need to have a separate policy for COVID-19 related incidents? So maybe Chun Ting, you want to have a go at that?
Yeah, thank you. No, you do not need to have a separate policy. Under the pandemic situation, actually the government pays for the medical treatments, but actually as a principle, MediShield Life does not discriminate based on the cost of your hospitalization. It is basically if you are covered, then it will cover you regardless whether it's COVID or anything else in future. But there's of course an exception. You left Singapore before a certain time, after the travel advisories were issued, then you have to pay for your own expenses for COVID, and no private insurance that is a shield plan, even then they will not pay. Yeah, but in the short, no. Yeah.
Okay, thanks, Chun Ting. The next question maybe is for Hui Min. If I were to restructure my debt with CCS, will I still be able to apply for credit facilities in the future?
Okay, when the person is placed on the debt management program, DMP, while he is servicing his debt, he is not able to borrow more. It makes sense, right? I mean, it's difficult to pay off debt while I continue to incur new debts. All right. But once I've completed my debt management program, that means I pay off all my debts. Then of course you can apply, but then it's subject to the bank's internal so-called credit assessment guideline, right? I do know of people who actually gotten new credit facilities. Now I also want to mention that for people who has been placed on the debt management program, we actually have a graduate program for them, meaning after they have graduated from the DMP, they have completed their payment, they can attend our workshop to learn about how to improve their credit rating. Okay, that hopefully will help to enhance their chances of getting new credit facility. Hopefully it's really because they need to get the credit facility. Yeah, I hope that answered the question.
Yeah, thanks, Hui Min. I think very useful. I think we should tap on all the good work that's being done by CCS.
Thank you.
The next question, the fourth question is again looking at the current situation. How do I plan for retirement? When I do not even have excess funds currently. So what are the special consideration that I should take? So maybe Chun Ting, you want to have a go at this?
Yeah, okay. So during the stress situations, as I tried to share during my session, what we really need to take care of is our own financial resilience and the financial health. So if you do not have a surplus right now, then I do not recommend that you invest. Which is the way that we plan for retirement by making our money grow. So really just get the surplus, have your savings, look at your expenses, cut down first. Because really, if you start to invest and you need the money, you have to actually liquidate your investments, and you may be doing that at a loss. So there's too much risk there. Of course, very practically speaking, what this might mean is that you might either have to delay your retirement, or you might have to lower your expectation of your retirement spending. However, we all have CPF as Singaporeans and Singapore PRs, so you might want to look at it, because that could give you some comfort that actually your CPF side is might actually be already having an asset and still growing at a good interest rate there. And of course, in retirement, there are other monetization schemes like the enhanced lease buyback scheme. There are ways that you could change into from a bigger flat to a smaller flat and put that and have some silver housing bonus and all those if you're already in that eligible phase.
Okay, thanks. So the fifth question, this is quite specific. I'm single in my 30s. How much should I allocate my funds for insurance investments? Vis-a-vis, how much should I pay for HDB flat? I think this is more of a financial planning question. So for maybe, Lorna, you want to have a go at this first? Lorna, you're on mute.
Thank you. As I've mentioned earlier, when you look at financial planning and then starting with having emergency cash and then looking at insurance planning before talking about investments, for insurance planning, looking at your own protection, please consider the number of dependents you may have. So at least we know you're single, you're in your 30s, you're 30, you're not married with children, so maybe your number of dependents is not a lot. But you may have parents or other relatives who depend on you. Then you still need to maybe help out with their finances. But assuming if you don't need to, then at your life stage, you may be looking at definitely at if you don't have a housing loan yet, then you're looking probably at being able to take care of yourself if you're disabled prematurely or have some sort of illness. So you may want to look at having critical illness, personal accident insurance, and so on, and some term insurance as well. So and if you are not so savvy in investing, then you may want to consider some insurance that allow you to do some investment and saving while you are being protected. Okay, so in terms of investments, you can use this ratio that Financial Planning Association of Singapore is recommending, which is the invested assets over net worth ratio. Okay, invested assets to net worth ratio. So this one is at least 50%. So it's saying at least 50% of your this can be the ratio that you are investing in. In terms of how much you should pay for set aside for your HDB flat, this one of course will depend on your affordability, because a HDB flat, any property, is a big ticket item. So I advise you to seriously look at how much you can afford to pay off the installments and over what period of time, and look at and consider government schemes as well, so that you can possibly get some grants to help you to have some savings while you're buying the HDB flat. But DBS has a DBS My Home Planner, which is a tool to help you input certain details, and you can actually look at a report that will be turned up for you on your affordability.
Thanks, Lorna. Chun Ting, you want to add on anything to that?
Yeah, thank you. I think that it's very important indeed to look at your finances in totality, because we all have scarce dollars. So it's like, how do you allocate that one scarce dollar? If you're talking about HDB flat insurance and investments, I would encourage you to think of flat and insurance as expenses, right? As expenses. So HDB flat, yes, prices may go up. A lot of people build some asset wealth there over the long term, but it's not something that's guaranteed. So, as long as you're living in it, it is the expense. The mortgage is an expense. So you need to take care of your financial health, and your total debt ratio, that means what you pay every month against your total income, should not be more than 40%. as a rule. So that, of course, HDB itself has its own mortgage servicing ratios as well. So look at it as an expense. Similarly for insurance, primarily to insurance is really primarily for protection. So again, look at it as an expense. So at Money, our philosophy is buy as much protection as you need, but pay as little as you can. So do look into low-cost insurance, and what you need to cover a few things is really about loss of income. And as Lorna mentioned, depends whether you're dependents. If not, then it's about, if you're ill or medical crisis or disability. And the other one is hospitalization insurance. Very, very important. Yeah.
Thank you. Thanks, Lorna and Junting. I think in the interest of time, maybe I'll just finish off with this last question. In the current very low interest rate regime, how can I protect my passive income when my fixed deposit is being eroded? So how do I protect my passive income through fixed deposit from being eroded? Should I consider alternative investments? Maybe Chuntek again?
Okay, thank you. I think first thing is we like to know whether you think about whether how critical is this passive income to you. Is it actually your safe retirement income floor? Because if it's a die must have amount, then it needs to be in a very safe place, right? Another related question is actually what's your risk appetite? Now, I venture to guess that if you are in fixed deposit in the first place, you have quite a low willingness or maybe ability to take risk. And so maybe your return for need may not be that high because FDs are really not inflation beating, right? They are really more safety with a minimal return. So if that is so, then I might put to you that it might not be suitable for you to chase the yield of alternative instruments like private equity, alternative investments like private equity, asset-backed bonds, because those can those come with quite a lot of risk. There are a lot of people chasing them, but sometimes the structures you may not understand, and that is really a problem. So ultimately, it depends on what is the purpose of these funds. If it's really for drawing an income, decumulation and all that, then what is important is reliability, not the actual yield or the return. And there are various strategies that you can use to increase the reliability of income. We don't really have much time to go into it, but you can look up concepts like the 4% withdrawal rule and all that. And of course, we have our CPF as an alternative instrument that can be used for decumulation or working towards a sum for CPF life decumulation. I think if you allow me, perhaps, I think it's very important that when we consider alternative instruments or any kind of investments, exactly that are not very common. Fixed deposit is quite common, so everyone knows that, and of course there are guarantees there as well. To do this thing of ask, check, and confirm, because if it sounds too good to be true, then it probably is. So what do you need to ask? What does ask mean? Rather, ask as many questions as you need to ask, to understand the investment. During the financial crisis, we had a lot of different structured credit and all that, right? And actually, most people don't know what it means, right? And it just sounds like you having your cake and eat it, and most of the time you'll end in grief. So ask as many questions. Check again and again to see the company. Is the company actually, or rather the investment opportunity, is it genuine or not? When you ask to transfer money and all that, does it actually exist? And finally, confirm. I think recently we had news, that people saying, oh, this is a representative of this bank, but actually the bank saying, no, my representative and all that. Confirm before investing in the company or in the licensed rep or the person that claims to be a licensed rep. Confirm the credentials. Where do you do that? You can use the MAS website to look into the financial institutions list, or you can look at the investor alert list.
Thanks, Chun-Teng, for sharing. So I think we've come to the end of the Q&A. Unfortunately, we already run out of time. I would have gone on if not for the time constraint. I would like to just thank all my panelists, Chun-Teng, Lorna, Hui Min, for very engaging, sharing, and very practical tips that we have shared, a lot of frameworks that have been shared as well. So thank you very much. And then with this, I'll hand back to Julian.
Right. Thank you, panelists, for the sharing. So before we end today's session, right, we will do a last polling. Can we put up the polling, please? So after the panelists have shared everything, right? So the question is to ask yourself, are you financially resilient? So same thing, to submit your option, please send the QR code and or the link at our Facebook comment box to actually submit your option. Okay, we wait for another about 10 seconds for everyone to submit. Okay, perhaps we can share the result now. Thank you. So I guess most of the reply is they are financially resilient. So I think with that, thank you panelists for staying throughout today's session, and we hope to see you for the next session. Thank you, everyone.